a grocery store. Price tags vanish. They blink back, written in a new currency. Shoppers freeze. One person holds the new bills. They walk out with a full cart while others stand empty-handed. When money changes, rules change. If you don't see it, you pay twice. If you do, you play with the scoreboard on your side. That's what we'll explore today. How money power shifts from one nation to another, how those shifts ripple down to your savings, your debts, and your future, and how you can prepare before the next wave hits. This is The Passive Path, where we talk about wealth on your terms. Subscribe if you want your money to work when you're not looking. Imagine your paycheck not in euros, yen, or dollars, but in a story. Because money is just that, a story people agree on. The strongest story wins. For a long time, Britain told that story. Ships, ports, and courts all spoke sterling. Traders trusted it. Settlements cleared in it. If you shipped cotton through Liverpool, you settled in pounds. Then America stole the story. Factories ran night and day. War orders filled book after book. The U.S. sold goods, lent credit, and pulled in the world's gold. Suddenly, the dollar looked like the safer anchor. The scoreboard changed, and everyone had to play on it. Think back to school. A group project. One kid owns the Google Doc. They choose the font. They set the format. You either write in their style or your work looks out of place. That's how money works on a global scale. Your portfolio lives inside that scoreboard. Every bond, every stock, every mortgage is marked in it. And when the story changes, the value of your effort changes too. The edge is simple. Spot the regime. Ask yourself, who writes the price tags right now? Choose your assets, your cash buffers, and your debts with that answer in mind. Because if money is the scoreboard, someone always holds the chalk. The question is, who held it first and who grabbed it next? Steam engines fired. Textile mills roared. Ships sailed with British flags stitched to their sterns. Britain's head start in machines and trade routes wasn't just progress. It was leverage. The pound sterling became more than money. The empire's assets aged faster than its ambition. So while Britain collected rent from the past, another country was already building the future. Factories humming, rails stretching, workers streaming in. The question was never if sterling would slip. It was when someone else would claim the clock. And America was winding it louder every day. Factory floors stretched for miles. Assembly lines clattered without pause. Smokestacks painted the sky with industry. America's machine was running hot. War orders arrived faster than they could be filled. Steel, chemicals, food, weapons, every shipment carried a dollar price tag. Europe paid with IOUs. The U.S. extended credit. Gold flowed into American vaults as payments came due. Each ounce of gold was a vote of trust, and trust is what turns paper into power. Banks swelled. Arms makers thrived. Capital piled high on Wall Street. The dollar was no longer just a domestic tool. It was becoming the world's anchor. Think of it like a flywheel. Exports spun it faster. Loans added weight. Gold inflows made it harder to stop. The faster it spun, the more the world relied on it. Picture a chemist in Wilmington before breakfast, his order book is already full. Demand from Europe outstrips his capacity. He hires, expands, acquires a rival, all paid in dollars. His personal fortune rises on the back of global need. When you own what the world cannot go without, you don't need a clever sales pitch. You need production capacity. You need contracts, and you need cash terms. That is a lesson for personal wealth too. Build your own capacity, flywheel. Develop skills that sell in any cycle. Offer value that earns prepayment. Keep cash ready to say yes when the call comes. Trade brings trust, but debt locks it in. And soon the world's favorite IOUs had dollar printed across them. Europe owed America. Germany owed the victors. The victors owed their people. The circle of debt had no end. So the payments looped back through the dollar. Loans were written in dollars. Settlements cleared in dollars. Central banks began holding more of them. The Dawes Plan put structure to the cycle. Germany borrowed dollars to pay reparations. Those reparations flowed to Britain and France. They, in turn, paid their debts to America. Each loop deepened the habit. Each habit made the dollar look permanent. Reserves are more than savings. They are trust signals. When central banks stockpile a currency, the world follows. Shops stock the brand that City Hall stores in its basement. It becomes the default. Not always because it is best, but because it solves today's pain the fastest. In your own life, the same pattern holds. Deals move faster when you work in the system your counterparty already trusts. If your clients want invoices in dollars, you issue them in dollars. If your landlord wants euros, you pay in euros. The path of least resistance wins. And once the reserves chose the dollar gained something greater than trust. It gained the right to set the interest, and interest would soon prove sharper than any weapon. Raise rates and money runs uphill, cut rates and money floods downhill. That lever sits in the hands of whoever controls the reserve currency. When America lifted interest rates, capital sprinted back home, foreign markets strained, assets marked down. American buyers returned with stronger dollars and scooped them up cheap. Reserves made the move easier. The world held dollars as safety stock. That deep pool meant U.S. borrowing stayed cheaper than others. Depth itself became a weapon. Resources sealed the loop. Oil priced in dollars forced every trading nation to hold them. To buy fuel, you first bought dollars. Demand never stopped. Three levers: rates, reserves, resources. Together, they turned the dollar into gravity. You can use the same lens in your own money. Ask three questions. Where are rates moving? Where do reserves point? Which resources are tied to the unit you earn in? A freelancer in Finland earns in euros but buys software priced in dollars. A rate hike in the US makes those tools more expensive overnight. The hedge is timing purchases or pre-funding when the euro is strong. Most people chase a bigger coupon. They forget the currency move can erase the gain. The lever above your bond is heavier than the bond itself. These three levers move nations, but they also move your grocery bill, your rent, and your retirement fund. The question is not whether they move, it's whether you move before they do. A dollar spike feels like the air leaving a room. Foreign assets shrink when measured in dollars. Borrowers abroad see their debts grow heavier. The safe currency suddenly costs more to hold. Before a spike, you need a checklist. Hold dry powder in your base currency. Keep a watch list of strong exporters and infrastructure firms outside your home market. Set alerts on exchange rates and central bank meetings. During the spike, move carefully. Add only to high-quality foreign assets. Buy in steps, not all at once. Prefer companies with clean balance sheets and steady cash. After the spike eases, trim positions into strength. Rebuild your cash pile. Prepare for the next cycle. The rule is simple. Buy stress. Sell boredom. A young engineer in Helsinki once bought a basket of exporters in Asia during a strong dollar burst. She sized small. She held plenty of cash. She waited. When the currency pressure faded, her dividends kept arriving on time. Patience carried her through. Dollar spikes punish the unprepared. But for those with a plan, they are invitations. Invitations to buy when others can only sell. Debt is the quiet shark beneath clear water. You only see its shadow when rates rise. When interest climbs, weak borrowers sink first. Assets marked against debt fall in price. Strong buyers with cash return later and collect what remains. The lesson is simple. Fix what you can fix. Avoid short-term variable loans on long-term assets unless you can repay quickly. Keep 6 to 12 months of living costs in reserve. Deciding what to do with debt is a choice tree. Do you prepay? Do you refinance? Do you hold steady? The right branch depends on rate risk and cash flow. Picture a couple in Tampere. They lock their mortgage at a fixed rate. They keep 1 year of expenses in savings. They build a side fund in short-term bills. No surprise can push them under. Debt is renting time from your future self. The cost of that rent changes with rate. Your job is to rent cheap time, not expensive time. Once your debt can't bully you, you are free. Free to shop the panic aisle when others can only stare. The shelves of the panic aisle are always full. They are stocked during storms, not sunshine. Prices fall when fear sells faster than reason. To shop that aisle, you need a system. Start with a core. Hold broad global equities, 60 to 80%. Add 10 to 30% in high-quality bonds or bills for dry powder. Then build satellites. Choose exporters tied to dollar cycles. Pick resource producers with clean balance sheets. Select real estate trusts with conservative debt. Enter carefully. Buy in thirds, never all at once. Review positions quarterly. Write your sell rules before you buy. Think of it as a pantry. The core is your rice, beans, and water. The satellites are spices and sauces that change with the season. Together, they keep you fed through any weather. A one-page plan is enough. It should fit in your pocket. It should survive a week where headlines scream collapse. Owning is easy. Holding through noise is the real work. The panic aisle rewards only those with patience and a plan. Behavior compounds longer than any asset. It is the only edge you can keep forever. Small routines build strong portfolios, set up automatic monthly funding, review your plan once a quarter. Write yourself a pre-commit letter for the next storm. Keep 2 tabs. Tab 1 is your plan. Tab 2 is your feelings. Never let the second edit the first. A freelancer writes 1 page each morning before markets open. What I will do if rates rise, what I will do if rates fall, what I will do if rates stay still. Then they close the page and get back to work. On the passive path we once spoke of, the boredom premium, returns flow to those who wait quietly. This time we add the currency layer. Boredom grows stronger when you hold through cycles of rate shifts and dollar swings. Boredom is not laziness. Boredom is discipline. It keeps you from moving when stillness pays more. Once you can sit still, you can let your income work in all weather. 2 streams keep you steady. Work income that grows with skill. Capital income that grows with patience. Build both. One protects your today. The other protects your tomorrow. Some streams flow in any weather. Digital products that reach across borders. Services priced in your local money. Savings stored in a global mix. Dividend growers with clean balance sheets. If your customers live in another currency, anchor your price in theirs. Settle back to your base only when exchange rates favor you. You control the invoice. You do not control the rate. Imagine a writer selling guides online. She sets prices in dollars for global buyers. She withdraws into euros only during strong conversion windows. The product is steady. The timing multiplies the gain. Income streams are not just about amount. They are about resilience. You want money that does not flinch when the wind shifts. When both streams flow, you are no longer chained to showing up every day. Your time becomes flexible. And flexibility is the quiet luxury. A calendar makes money predictable. Without it, decisions drift with moods and headlines. Each quarter carries its task. First quarter is for tax checks and reviewing shelters. Second quarter is for rebalancing and adjusting currency cover. Third quarter is for liquidity checks before the policy season of autumn. Fourth quarter is for harvesting gains or losses and resetting cash targets. Each month repeats the basics. Automatic investments, review of watch lists. Each week is lighter, a zero-based plan for spending. 1 hour learning from money history. Predicting is noisy. Preparing is quiet. A calendar gives structure to that quiet. When the year closes, the path feels steady. You work the rhythm instead of chasing surprises. 3 dials matter more than the noise. The first dial is the rate path. Watch your central bank. Watch the Federal Reserve. Rate direction sets the tone for all assets. The second dial is the dollar index. Track its trend against the major currencies tied to your life. If it rises, pressure builds abroad. If it weakens, relief spreads. The third dial is energy, oil prices, shipping costs. When they move, currencies and markets follow. What to do with the dials is simple. If 2 flash tightness, grow your cash and trim risk. If 2 flash ease, deploy carefully in steps and extend duration. You do not need to be first. You only need to be ready. History does not repeat in detail, but the invoice often rhymes. Britain's early lead was built on machines, ships, and trade routes. The pound sterling became the world's invoice. Courts, insurers, and ports all spoke its language. Then came America's surge. Factories ran nonstop. War demand filled order books. Gold crossed the ocean and filled U.S. vaults. The dollar's credibility hardened with every shipment. Debt cycles sealed the shift. Germany borrowed dollars. Reparations flowed in dollars. Allies paid back in dollars. The loop made the habit permanent. Interest rates added the sharp edge. Raise them and foreign capital rushed home. Lower them and money spilled abroad. Policy in Washington carried weight in London, Berlin, and beyond. Oil priced in dollars gave the story permanence. Every nation needed energy. Every barrel required dollars. The habit became global law. For your own path, the lessons are direct. Keep cash options alive. Buy quality when currencies crush prices. Borrow only with respect for rate risk. Build income you can price across borders. The history is clear. The future is uncertain. But the playbook repeats its rhymes. Start with a sprint of 30 days. Each week gives you 1 step forward. Week 1 is the foundation. Write your 1-page money map. List your goals. Mark your base currency. Record your debts. Set your cash target. Week 2 is preparation. Build a watch list. Choose 10 global companies. Pick 3 simple ETFs. Add 1 ladder of bonds or bills. Week 3 is automation. Set automatic funding to investments. Create alerts for rates and currencies. Make the system run without daily effort. Week 4 is action. Take the first small position or build your cash pile if conditions are tight. Tiny moves carry more weight than grand speeches. In a month, you have rhythm. You see money as steps on a path, not guesses in the dark. You control the pace. The world no longer controls you. Noise grows loud when storms hit. Everyone shouts their trades. Everyone claims certainty. You need a filter. Ask 3 questions before any move. Is this in my plan? Is the size small enough? What would prove me wrong? Social rules help too. Post your process if you must. Never post your positions. Keep your moves quiet. Build a ritual against panic. Read 1 page of money history each week. Anchor yourself in long cycles, not short screams. A community strengthens the path. Share your 1-line plan. Compare without copying. Learn from differences, not from noise. Crowds will always yell. With a clear filter, their noise becomes background. You act on signals, not echoes. Money power moved from Britain to America. Sterling first, then the dollar. Machines, ships, gold, and oil carried the shift. Each turn of the wheel rewrote the scoreboard. Price tags followed the new unit. The world adjusted, willingly or not. You now hold the map. Keep cash ready as options. Buy quality when currencies crush prices. Borrow only with respect for rates. Build income that crosses borders. The passive path is about this rhythm. Simple systems, steady habits, moves that last longer than noise. Like this video if one idea changed how you see money. Subscribe to The Passive Path for clear lessons on wealth and freedom. Comment your base currency and the asset you are watching next. When the price tags change, most freeze. You will not. Feel free to explore other videos on this channel to keep learning, and I'll see you in the next one.